Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday. It is the 26th of August. Welcome out, David. Welcome out, Brenda. I think I'm going to officially have to kill my other computer with that sadly has the built-in cam. So today we are just the voice in the machine as had to migrate over to the better computer. Just haven't got that all figured out just yet, but maybe that'll be a good thing in the end. And welcome out, Micah, and hello there, Patricia. Hope everybody had a great weekend. A pretty boring day in the market for the most part. We saw a little bit of a gap up on the open and just kind of that slow, boring drift throughout the course of the day. Look like maybe as we're coming into the open today, little bit of relief in the trade war stuff, although I think we've got a long ways to go before we can trust much of anything personally in the trade war. One thing that was interesting today, I mean, we gapped up and just kind of hung around. It really was very, very dull, but that last candlestick of the day, that last 50 or at least 15-minute candlestick of the day, quite a bit of buying coming in to the close here today. Let's see how this is going to look on an hourly chart. Still got a ways to go, right? But for the first time, if we kind of think about this just as a chart and take all of the news and our opinions out of it, we've had our big drop, our bearish retracement, started to drift to the downside. Arguably, I would say hit our entry point, or at least we're thinking about it on this candle, and we've worked right back to resistance. So again, haven't done anything even on this hourly time frame, but we are bumping right in to that trend line or that previous swing high on that hourly chart. I do find that interesting, especially with the buying coming in today. And welcome out, Adib, and hi there, Joel. Good to see you, and always a pleasure to have you with us as well, Julia. Great to have you guys here, and great to be a voice on the other end. Now maybe I don't know. It's kind of nice. I didn't have to comb my hair. So even if we can break through that little intraday resistance, we've got a ways to go, right? Nothing really has changed. We continue to trade within a trading range on the S&P 500, Trade War 101, as Coach Mark would say. Until we get some clarity, it's boring, and I wish it was more exciting, but an area that's probably we need to be careful with. Hard to make too big of a stand one way or the other, in my mind at least, until we break one way or the other. So just another day in that trading range. I have it, we have our support level, and I think I probably brought this up on Friday. I'm calling the support zone 2800, but I'm recognizing that to get to 2800, we'd have to break this little floor that we have put together over the last few weeks. That would definitely be a signal to the bear side, but with all of the stuff that we've looked at and talked about on many occasions at that 2800 mark, whether it's the 50 weekly, the 200 daily, the big round number, just way too much there for me to want to go short if we break 2820. If we break 2800, that's a pretty ugly signal, at least from a bullish point of view. Definitely interested there. So much, not a whole lot to say here. Interesting from a broad market perspective. It was really one of those days, which quite honestly, I think maybe you could argue the market needed after the way it ended last week. So that is true, David, and I oftentimes do, my friend. So now I don't really mind combing my hair that much. I don't put that much effort into it, combed or uncombed, as you've probably noticed. So over in the Dow, very similar. The Dow and the S&P in particular look very, very close to one another. Little bit of a bounce back day here today, but certainly within the larger overall range at this point in time. What's going to be really interesting is seeing, how we respond when we break something, right? And right now we're kind of back in the middle, and that's what you have to keep in mind. And it's kind of annoying maybe for our, more traditional swing trades. But if you think about where we are today versus where we are just last Friday, just over a week ago in trading terms now, we're at the exact same place. A week and a half before that, we were in the exact same spot. So we're moving, and we're moving quick, right? One way or the other, but we're really not going anywhere within the, we're really are stuck very much so in a range. So very, very much like it was last week. Got to be careful with directional trades. Theta is our friend. Out of the money credit spread, certainly our friends. Got to kind of tighten up the time frames a little bit for those swing trades. Not a textbook swing traders environment, at least. Over in the NASDAQ, still holding that trend line. I'm going to have to do this because I had to quickly move into this one today. But I think you could argue here that we are holding the trend line, that the NASDAQ has, put in, been trying to at least put in higher lows, some upward movement here today. So still, much like last week, a little bit stronger on the back of some of the tech companies, many of the retail companies that just had really fantastic responses to earnings here yesterday. Well, not yesterday, I promise, last week. Still a lot of work to do, still hasn't done anything. So we haven't broke support, haven't broke resistance. Of course, probably the most interesting chart right now is the rut, hanging out at that support level that has been strong over and over and over and over again. Yet another example of it here today. Buyers coming in. If you look at this candle on the rut today, certainly this candle looks healthy, right? Whereas, all the other candles look okay, after the gap. Really healthy looking candle here on the rut off of that support level. That support's a big one to me. It will continue to be a big one to me until basically it gives out, realistically speaking. Still have lots of work to do, and I'm not much of a support bounce player, as you guys know, but very strong level of support. Below that, that is where I do believe we need to be thinking about management on the condor side of things. Heck, I think you could argue that that would make for an interesting directional swing trade if we get a clean break below that. As we've talked, the only thing of really any note that we have on the rut below that support level, and make no mistake, I think we should bet on that support holding. But if it goes, the only thing of note that we really have is that 200 weekly. And recent history, at least, as we can kind of see zooming back, it's an area, but it's not a number. It doesn't stop where, that's not where the rut tends to stop. We've kind of caught our footing a little bit below it on the last two trips. But so I don't expect that to be a huge thing, but I do believe in the 200 weekly moving average. And so I will respect it here. Beyond that, it really is the trend line / that swing low. There is a lot of downside in my mind if the rut breaks that support level. So certainly something worth keeping an eye on as we work throughout the course of the week. As we move into our sectors, much like the market for the most part, just kind of a boring day at the office, still dancing around that 200-day moving average, lower highs, lower lows for some time. I still would believe that a break below last week's low, so just the second candle that we see here, could be arguably confirmation to the downside. We really don't have a lot. We do have a bit of history at that $54 mark. We, of course, have a major pivot at that 52.50 mark, certainly something worth keeping an eye on if we work to that, but not a lot of support to prop us up. Let's take a quick peek here at some of our names within this space just to kind of see where we're at here. We kind of have the specialty chemicals. Our friends in Sherwin-Williams definitely feel like this is shaping up for a bullish retracement. I'm still open, not actively going out of my way to find bullish or bearish directional trades right now, but I do think you have to like the strong response to earnings. The barring Friday, fairly respectable selling. Friday everything had that huge red candle. I think we need some development on that end. So you're seeing still a little bit in things like Sherwin-Williams, Air Products still on a breakout list, although I think you could argue if it breaks support level, this support level right here, and let's see, I might be better at drawing lines. This screen's a lot bigger than my laptop screen, so it's easier to draw a straight line. If that support does give out, you could argue there's some room to the downside on that end. Much like Sherwin-Williams, you have Ecolabs here, but that is about where the really good looking, potentially trend holding, if nothing else, they're holding trend stocks within this space. Then you get into your PPGs breaking down. LYB here, I think, again, you could argue a break of Friday's low could be a new entry point for the bears if they're looking that way. Very similar on International Paper, kind of hanging right at an old support level. So certainly weakness is it's very clear in my mind that we have to be skewed to the bearish side. I'd be lying if I said I won't be open to those strong upward trending stocks. I will do that. I will be open to them, but there's a lot more bearish ones than bullish ones right now, at least in my opinion, in this in the material space. Over in energy, again, we're going to have a potential opportunity, I believe, on a breakdown here, especially if we can hang out a little bit. Had our bearish retracement last week, downward movement, hanging out at support level right now. Probably need to see that go before we can get that next signal, but we really don't have much until we get into the mid 53s at our recent swing low. I continue to be bearish personally on the energy space. I do believe it is the best place to be bearish right now because we were seeing very clear bearish signals before the trade war stuff, and I always prefer that personally. There's a ton. We've looked at a lot of them. There are a bunch out there. You can pick your ticker symbol in the energy sector, and I think you could arguably have a trade to set up. Just CXO, off the top of my head, we just broke our trend last week. I think you could argue we could get in tomorrow on continued momentum. You could argue we get in if we break that recent swing low. You could argue that we're already in this thing. And this is just one. And I have kind of liked these guys a little bit. But, I think our old friends at Oxy, who've, just tend to really struggle kind of no matter what, already giving out on support. We saw SLB and some of the service type of companies last week kind of really give out as well, hanging out by a thread on support. And if we look at SLB on a long-term time frame, that is a big old breakdown. I might have to go to a monthly so we can actually see it here. But that is a big, big break that we saw here, these last couple of weeks. Just tremendous bearish signals all over the place in my mind out in energy. So, again, if I'm thinking about being a buyer, I need to see it break resistance. I need to get back above that swing. At the very least, I need to get above last week's high. At the very least, break some resistance. Then, hey, if we rally up starting tomorrow and break that resistance, maybe it does look like a little bit of a W that maybe we can talk about. But until that happens, and I don't expect it to, I will continue to have a very bearish overall stance. Over in financials, we're going to test that 26, it sure looks like. And we've talked a lot about how much the banks are lining up with that $26. But I do believe that is something very much worth keeping an eye out for. You've got JP Morgan, same general price range, right? We've got Bank of America, same thing. These are big deals in my mind. These support levels give out, and that is very bearish because it's probably, I don't know this, but it's probably happening on the ETF and many of, the majority probably of the banks, if that's the way that it goes. So we do think we continue to shy away from the banks from a bullish point of view. If we're looking bearish, and I think with all of that support, I think I am looking for potential breakdowns. Got to see that 26 give out. Got to see these banks break some support. You're even seeing the regional banks kind of a little bit ahead of the game. They are at an old support zone. I think you could argue they've broken it. I think you could probably argue breaking these lows right here could be a trigger just looking at it. So even maybe extra weakness in the regional banks. On the other side of it, we still have strength and in the exchanges, really strong response on CME here today, really good pullback, really nice upward movement. Probably going to have, I don't know, just eyeballing it, probably going to be a hard time to get a risk to reward where we would need it to be, at least where I would need it to be, but continues to show strength. We've talked a lot about kind of the divergence that we're seeing in some of the insurance companies. Some are still holding trend, looking fantastic. Others have kind of given up, and others like Travelers are still in the middle, K-trade style. I think with the time we've spent on Travelers here, I definitely think we can think about putting these guys into a K-trade list. Just wait and see which way we break. We're in the middle today, so your guess is as good as mine which way we ultimately go. But a break either way could be a signal for us. And this one's really interesting. I don't know if we looked at this last week. I know I wanted to, but I think we might have kind of forgot. If we look at this on a weekly time frame, it's for this pullback, for us to break that resistance, that would look like a very nice bullish retracement on that weekly chart. And on the other side of it, if we break that support level, we've failed at, the 9, that was a while back now on the 9 weekly, we failed at the 20, that would likely mean the 21, the 9 is falling below, so we'd have a lot of pressure without a lot of support that I'm seeing, at least until 136, 137. Definitely a K-trade candidate in my mind, but until we get a break one way or the other, I guess we'll just wait. That is what you're supposed to do on K-trades, is wait for that signal. Don't guess, because you'll probably be right half the time and wrong the other half. So in financials, nothing really has changed. That 26 is a big mark in my mind. I don't think I'm probably the only one that feels that. I do think we need to close below it for that signal, but if that happens, I expect downward movement. 25, and we probably talked about this last week, but 25 seems almost inevitable. If all of those banks break support, we see the break on XLF, that would certainly seem almost like a shoe-in to get to that 25 support level. On the other side of it, the support very well may hold. We're just going to have to wait and let some signals develop, though. I guess you could argue to buy blind off of support if you would like to, put your stop loss just below that, and your risk to reward would probably be good, but that's a little aggressive, especially in these market conditions, in my mind. Very similar analysis over on the industrials as well, still hanging around. It's tough, but I think we have to, for the clear signal, I do think we have to take out our swing low at this point in time for the actual signal. Aggressively, maybe just a close below, the line could be the signal, but that does throw a little bit of a wrench in there. You still are seeing strength in the defense, a nice little hammer candlestick here on Lockheed Martin here today. Certainly nobody's idea of a textbook bullish retracement, but if we, kind of cut Friday's candle into maybe 3 candles, red candle, red candle, red candle, and then a hammer, I think we'd like it quite a bit more. Of course, we can't do that, but when we factor in what Friday looked like, everything had a red candle like that, I do think that plays a part. So an interesting pullback, albeit very, not very long, a very short time period in the development side. I do think that I'm going to continue to work with these guys. These guys have been strong. On the other side, LHX here probably shaping up for a nice breakout play. If we can hold our support level, you could argue pullback, but we've tested the same resistance level twice. That would concern me. If we buy it off of today's high tomorrow and it can't break resistance, very difficult to have. We basically got to be staring at it, right? So it's going to go into my breakout watch list. On the other side of it, because we are at a pretty strong level of support, you saw Honeywell break through the 200 last week, break further here this week. We did come off of the lows, showing a lot of weakness in Honeywell. UTX, another interesting one, kind of hanging out a little bit above support, but if this support gives out, I think we are probably seeing some downward movement. On the other end, you've got KSU here, very clear top developing here. This is probably not something we have to worry about tracking this week. If we're interested in this breakout, I guess it could happen in this environment. But much like the broad market, we are in a very established trading range. Break either way certainly could be interesting. You had 3M hit a new 52-week low here today, continuing to work to the downside as well. Not a lot of support to hold us up here. We've got a little bit, as you can kind of see, if I go way back in time, a little bit of a breakout occurred here at this level at 147. Beyond that, we don't really have a lot until 134, 135. So continuing to show a lot of weakness over in 3M as well. Boeing had a little bit of a bounce back. As you guys know, I've been shying away from Boeing, bull and bear, since, and I don't like newsy things personally. A big run. Now we're kind of working into some resistance. Now it'll be interesting, a little bit of a challenge potentially for us. And over in CAT, and again, I want to come to a weekly chart on CAT here. We are testing a major support zone as well as the 200 weekly average. And I'm going to try to just extend this guy out here, and it's not going to line up perfectly, but that whole area is has been a pretty important price point, break below that, that is quite a bit of, I don't know where you want to buy CAD. Sooner or later, you're going to want to probably, but I don't know where that would be. Not a lot of strong support. So kind of testing its very own important support zone, kind of lining up with the overall sector. Got to be careful. Again, these things can be extra sensitive to the trade war stuff, still holding out at support. Buy side going to have to basically be a break of resistance. I think much like the market, we've got to come out of these longer term ranges to get a clear signal one way or the other. Over in tech, holding that trend line, much like the NASDAQ. So that's certainly a positive thing. Seeing the same thing over in the discretionary. You know, we actually, this is the one area where it wasn't much and it didn't last very long, but we actually did break resistance, right? We've now technically created higher highs and higher lows in technology. If the market's going to rally this week off of that support or off of good news in the trade war, the tech sector is kind of lined up to be in an interesting place for it. One of the few areas that have been able to break through some levels of resistance. The only, you know, again, we've got things like the semiconductors that continue to be very, very susceptible, right, to anything trade war related, you know, and they're kind of stuck in their own little ranges. But, you know, it's an aggressive area to look, but that doesn't mean it's not sensible if we see some upward movement. We've still got plenty of work to do, you know, as we look at some of the biggest names. We're kind of neutral right now in Microsoft. I think you could say something very similar to Apple, although if I just still that, maybe you could make a case if you love Apple that it kind of looks like the sector. I think that'd be fair. Visa probably need to break some resistance. MasterCard, a very clean breakout candidate, I believe, especially if we see some upward movement, would put in a nice little cup and handle if that's the way that it goes. Of course, Cisco, after, you know, getting absolutely just destroyed on its earnings report, got a little bit of work to do. But with the downward movement that we've seen, I think you could at least make an interesting argument that if we took out resistance and were able to create a higher low or even just hold the low, maybe that would be a sign of reversal, probably looking elsewhere. So much like we kind of talked late 2 weeks ago, the individual components have lots of overhead. Pretty much everything that we look at, that's the nature of the sell-off that we've seen in the market. Things aren't going to be quite as clean to the upside. We might have to dig a little bit deeper to find something out there with a nice clean chart. But I do think with where we see the tech sector overall, you have to at least be open to looking, if you're looking at things from a bullish point of view. And I think, like I said, I think we need to come out of this range, but that is just my opinion. I know not everyone agrees with that. Certainly, if my opinion was, hey, we found the bottom, the trade war stuff's behind us for the time being, would be a very appealing area with the price movement that we've seen over the last several weeks. Over in staples, just continues to be a fantastic place to be. Really strong response to the Friday sell-off. That really didn't concern me personally all that much. We do have a breakout that we'll have to be keeping an eye out at this resistance level at around $61 going forward. Probably some room for us to work between here and there. But much like, you know, utilities a few weeks back, we do have to respect that resistance level, at least in my opinion. Coca-Cola, probably the cleanest chart, I think, right now within this space. Well, at least of the ones I follow. Very clean breakout candidate. Big pop on earnings. Nice drop to the 50. Nice rally back up. Pushed back down. Looks very much like the sector, right? Working with the market. Most red days we're kind of lining up with the sector and the market. Definitely an interesting breakout candidate. I personally believe. I still will maintain that the areas I feel the most comfortable with from the bullish perspective are these defensive sectors or the quasi-defensive sectors like the staples. As they say, you're not going to stop drinking Coke. If you're a Coke drinker, you know, you'll find a way to drink some Coke, right? So over in utilities, speaking of, just continued to show tremendous strength, sitting on that 9 last week to close us off. Really a strong candle here today. I wish there was anything clever for me to say about the utility sector, but there really isn't, just showing a tremendous amount of strength. 61 is our first level of defense from a technical point of view. Ideally, that holds. That's the, in my opinion at least, once we break that breakout point, that old resistance holds as support. But if we do need to pull back a little bit more, say into the 50-day moving average, could be an interesting opportunity for us as well. So now we're just another day in the utility sector showing tremendous strength, much like the broad market within the range over in the healthcare sector. I didn't see what happened with it, but I did see that Johnson & Johnson was ruled against this afternoon in their case. I haven't followed it too terribly much, but I did see in a big red headline that they lost their case. Just continues to be an area that scares me, both as a bull and a bear. I do think you have an interesting breakout candidate in Merck. I do believe that, and I do think you have to at least take a quick look at CVS. Of course, they broke out of that sideways range on earnings, had a pretty ugly pullback, but have shown some nice upward movement, nice response to it, a little bit of a doji on that 200-day moving average. It's an aggressive pullback, and we're not too far removed from a pretty downward trend, but I do think that is kind of in an interesting location. It's just so mixed, and most things, while those two charts kind of, okay, I could see what someone might be seeing on those charts. You look at things like Pfizer, a little bit of a low base potentially developing. You look at something like AbbVie, maybe showing very early signs of reversal, but it's going to have to do a little bit more than that after this extended downward trend. MDT, our old friend MDT, is holding up pretty nicely after gapping up on earnings, though a little bit of a consolidation period going on over there. But on things like Abbott, all of a sudden, one of the strongest trending stocks, in my opinion, in the market for quite some time, now all of a sudden I have to worry, is this a reverse head and shoulders pattern? It's very, very mixed. I think that's probably reflected when we look at the chart for the ETF, but I think it kind of underscores how at least I feel about the overall sector. I continue to shy away from it. It is kind of one of the somewhere between aggressive and defensive sectors, I guess you could call it, until we get some clarity. Even breaks to the downside, though, I've got some really good history at $87, and then I have some more at 86 or approximately 86. Just a difficult place to get a clean, clear read on. Whereas I look at the financials or the industrials, I say, oh, if those things break, we're going. I look at healthcare, and whether it's either way, it breaks above or below, I'm thinking, well, there's just that in the way. So I continue to shy away from that. Still like what we're seeing overall, especially if we can get kind of, if we see the market stabilize and break to the upside. Really like what we've seen. We looked at a lot of these stocks that had earnings, and while sure, there's always somebody out there who's just not doing their part. L Brands, to name one. I know many of you guys work with L Brands from a bearish point of view, and very wisely so to those of you that do. Still continues to show a lot of weakness. Macy's just continues to push and push and push further and further and further to the downside. But many things, the Home Depots of the world, just had really great reports, and again, maybe we need a little bit of development, maybe not. Maybe we could argue, try to get in aggressively. Personally, I think the bulls won last week. We had lots of earnings within the retail sector last week. Still like where we're at here. We, of course, have the big one, Amazon, in a range, much like the broad market, hanging out at support. Think you could argue a break either way as a signal. I know a lot of people don't like the idea of going short on Amazon, and I can't really blame them, especially if the whole market's selling. I have the entire world to choose from. I'm probably not choosing Amazon either, but I do like the empty space that they have if support gives out. I do have to admit on that side of things. Mickey D's, always worth taking a quick peek at McDonald's. Little bit of a pullback. I don't like deeper pullbacks. You guys know me. Once I see anything kind of, violate trend, now all of a sudden resistance is held. But that is just me. I think an aggressive trader could say this is a pullback opportunity to get back into McDonald's here. I would probably put it on my breakout list, though, personally. And of course, the other big name in this space. Starbucks continuing to build up a lot of pressure, just consolidating, holding its own mini range within that larger range of the market. So certainly an area of interest on both sides. But I do think as we look at the NASDAQ and then we look at tech and we look at the discretionary sector, we kind of factor in the response that we saw to many of those earnings reports last week. We are holding support, at least today. If we give out 116, I would expect 114 is probably, in the cards, at least potentially. But as of right now, we've made that higher low at least. We did technically make a higher high too. I think it's one of the areas, the aggressive areas that catch my eye the most from a buy side are over in the NASDAQ related companies, discretionary and technology. Of course, I like the boring ones. I like the defensive ones, including the REITs. So we continue to hold up very nicely in the REITs. Nothing too fancy to say here, much like utilities continue to show just a tremendous amount of strength. 3850 can be our first or support catalyst, or probably more technically speaking, Friday's low, but this zone could be a little bit of support. If we do spend a little bit of time here consolidating, we'll definitely keep our eyes open for some breakout plays going into late week or maybe next week. We'll have to see. And lastly, over communication services, just much like the market, looks very much like the Dow Jones or the S&P, right, where we have very little clarity, haven't broke one way or the other. Facebook did break below its low, but saw no follow through here today, at least, as it kind of gapped up with the market. I do believe that, we might see more selling if we do take out last week's low. That would kind of be a confirmation price point for me. If we hold up, maybe we do end up taking out some resistance. And of course, Google hanging around, the 50-day moving average. I was really liking that it was holding that trend line. Got caught up into selling Friday, whether it deserved it or not. We could argue that all day, but it did, right? But we did hold the 50-day moving average here today, so have to like that. Take two, another one that we looked at the pullback that got us going last week to start the week, getting another nice little pullback opportunity here this week as well, it looks like. Certainly have to like this overall trend within this space, like the hammer candlestick, like the price action. I bet you if we go into a 15-minute time frame, yeah, we're going to like what we see. Nice upward movement throughout most of the trading day. Very interesting bullish retracement candidate. Again, maybe not textbook, would like it to have maybe drifted a little bit more. Don't love that we had the high volume on Friday, but again, that's pretty much everything on Friday, I think. So certainly an interesting character over there. AT&T, another one that we've been kind of keeping an eye out for after breaking out, showing a lot of movement. Probably needs a little bit more development. And of course, where are we at here? Let's go take a quick look here at Charter. Charter had a really strong day here today. I don't know if there's anything we can do about it, but a really strong candlestick, very decent volume here today, pushing back above the 50-day moving average. Disney looks like it's putting up a fight at that old support zone. Still think we have some work to do, and still think that if that gives out, that might be a little bit of a signal to the downside. Netflix overall continues to show a fair amount of weakness within this space. So certainly some interesting things on both sides, stuck in the range. Not surprised to see some interesting bulls and some interesting bears. There are some interesting trade setups developing this week, I believe. We just have to balance what we want to do with them with the reality of the market, right? This market is very news driven. A tweet can push it one way or the other. And if we don't like that, that is okay. But we probably should shy away from the purely directional stuff, during this time frame, and lean more on the theta type of strategies. Certainly some interesting trade setups, though, as we get working into the week. As we move into the rest of the world, of course, a little bit of a buyback day today, so the VIX is going to dip a little bit. Nothing really to see on that side of things. Big bounce back day for the dollar after that very strong reaction on Friday. You're intraday playing this or probably not. Probably need a little bit more clarity from the swing side of things at this point in time, continuing to build higher levels of support. Still would like to see it break, as I've been watching all year for that break, right? So why not wait a little bit longer? Pretty decent day in silver. Gold had an interesting day, popped really early because when the futures opened yesterday, we drifted down very, very quickly on the ES, on the S&P. So we had a really big pop on the dollar or on the gold right out of the gate, but it's kind of drifted throughout the course of the day. We put in a nice little floor here, though, as you can kind of see on that intraday going into tomorrow. Continues to be strong. Not the most inspiring daily candlestick here by any means, but I mean, hey, I'm not going to fault anybody with what they're doing on gold from a bullish point of view. Really nice movement on silver, though, here today, pushing through that resistance. Did come off of the highs, much like gold, but it pushed through another resistance zone. There's going to be plenty of little things that we could constantly argue that, this high back here at 1767, or, there's going to be a million of those things, right? But any real resistance, at least in my mind, where we've seen significant price action, we really have to go into $18, in my opinion. So I expect, whether it happens just chop, chop, chop right up the chart, or it takes a little bit of time, I expect somewhere in the not too distant future to be talking about silver at $18. Both the precious metals continue to show a ton of strength. So for me, as long as it makes sense bullish, maybe that is just cash flow type of stuff. Maybe it is directional type of stuff. The strength, kind of speaks for itself. I don't think you could make a very compelling bearish argument on either of it at this point. Over in natural gas, we are going to get a fight, it looks like. So we put in that higher low, right? And that was Friday's low. We didn't know it on Friday, but a strong upward move here today, I personally will say that confirms it. I will say that, okay, well, now if this breaks, that's where you sell. But if it holds, this is the very early sign of reversal. First time we've been able to do that in a little bit. Now we have to break resistance, in my opinion. We always do. And so whether it's natural gas or not, but we're running into it. We've got to clear the 50, and resistance is going to be a little bit above it. But that would certainly be a signal of reversal, granted early in the process. But I think we'd have to respect a break of resistance as a bullish signal. Going to be an interesting one to battle. Last time we were showing some nice upward movement, this has been an interesting one these last few weeks, right? Because it's almost felt like sellers just left. Now buyers were very scared. A lot of folks were like me, I'm not daring to do anything yet. But a lot of the sellers just seemed to hit the road. And we just had a nice drift. We ran right into that 50, and that is what pushed us down. So it's going to be interesting to see, maybe as early as tomorrow, challenging that 50-day moving average. On support, I do think we look at last week's low before any real clear sell signal potentially can be developed. And lastly, over in crude, we did push down. We had a crazy day, right? Crude's going to kind of go crazy with the trade war stuff as well. I think a break of below today's low, you could make a case that would be a bearish entry. There's really not a lot of support between here and our lows in that 50 to 51 range. I expect that is probably the most likely thing to happen, but that doesn't make it a good trade. I still believe this is a better cash flow area right now than a directional trade, unless we're intraday traders, in which case there's a lot of really good intraday trading opportunities in crude right now. But for the first time in a little bit, you had the very aggressive, trend line traders that maybe got in mid last week when we kind of failed at the top of the channel. The really aggressive swing traders are probably already in, and maybe more of them came in here today when it took out last week's low. I think you could make an interesting case. I mean, there really isn't a lot of support until we get to 51. I'll call it. I'm going to call it 51, but it is closer to 50-50. So somewhere in that 50 to 51 range. 50 is just such a big number on crude oil. And so I do think that we have to, respect that zone. And if we don't respect that zone, you can clearly respect the bounces that we've seen off of it. It was ugly, but it bounced. It was ugly, but it bounced, right? And so we have some really good history, but we really don't have a whole lot. Break below today's low. I do expect, if we continue this, if we can't break, get back into, breaking out of this channel, I do expect a test of 50 is probably the most likely thing personally. But I do believe right now it continues to be better suited for intraday players than swing traders, or cash flow players than swing traders, just with the increased volatility that we're seeing. So that is where we find ourselves, ladies and gentlemen, after another, interesting way to start the week. Gap on the open, not a whole lot, but that last little bit, that last candle is certainly something interesting as we go into tomorrow. Obviously, check the futures on the open, see if anything crazy happened. But that's a really strong last, end of the day candle. I can only think about what I like to do and what I would be thinking about doing. And I wouldn't have been looking at this 15 minutes before the close and say, you know what, I'm going to load up on some S&P 500. But somebody did. So somebody out there was willing to do it. And you're very welcome, Whitney, and great to see you, sir. Hope you are doing fantastic. That is kind of the first real, that's an interesting candle. As we look at the S&P, let's see how we open in the futures. We do have some room, right? We have room either way. Right now, we have room to run to the upside and room to the downside without coming out of this trading range. So, I do believe we continue to be fairly neutral in our delta, open to bulls, open to bears, expecting increased volatility, leaning on the theta type of strategies while we're within this trading range, much like probably most of you and the other coaches that tackle trading. So, ladies and gentlemen, that'll do it for the market recap for today, but it certainly was an interesting one. And as always, I certainly appreciate everybody's time. Great to see you guys after a nice weekend. We've got a 3-day weekend coming up as well. So one of the rare Mondays off in the market. So that'll be interesting for sure. Of course, if you are new around here, welcome. Great to have you. We certainly appreciate you being here. We always encourage you to hit that subscribe button, that notification bell. Come check us out over at Tackle Trading. Send us an email, team@tackletrading. We'll get you hooked up with a free trial if you're not already pro member, so you can kind of see the other side of what we do. We're always trying to do more and more for our pro members. We appreciate each and every one of them. They make it a lot of fun. It's certainly more fun to talk trading with you guys than with my dog. That is for sure. Of course, we're also active on all of the social media platforms, Facebook, Twitter, Instagram, LinkedIn. You know the drill by now. I'm the Twitter dude. We're over at Tackle Trading. And of course, I am at Frank Martin 23. So yeah, we're in an interesting spot, David. We really are in an interesting spot and a really strong close. I mean, that closing candle, I don't know if it means anything, but it certainly jumps out. So, I don't know if it means anything, and in the broader sense, probably doesn't. But in the shorter term, it might be a little bit of a spark. I mean, that was a pretty impressive closing candle, not the type you would expect to see in the middle of a trading range, in the middle of a trade war, right? So, but such is life. We are in a range, and if we keep that in perspective, and we, appreciate and work with the market that we have, not the market that we want. I want this one back. I'll be happy when we are back into a nice, smooth trending market, be it uptrend, downtrend, really don't care. I'm not a huge fan of heightened volatility, but it doesn't matter what I'm a fan of, right? The market certainly doesn't care. So thank you, Patricia. All right, guys, we'll get out of here. I'll be doing our onboarding webinar for our new team members. So that'll be a lot of fun. And if that's you, I'll look forward to seeing you here this evening at 8:30 p.m. Eastern over on Tackle Trading. And if not, I'll see you all same time and channel here tomorrow afternoon, maybe with the webcam, but this might be a webcamless week, so I can and get to the I don't know, it's gonna be tough to leave the market to go get a webcam. One of these days I will, and I won't just be a voice in the machine, but I think we're gonna move over. This is so nice not to have to worry about my computer, mouse, whatever, going crazy. So get out of here, guys. Have a fantastic Monday afternoon and evening. I'll see you all same time and place here tomorrow afternoon. Thanks, everybody. Bye now.